So yeah, folks, we did see a sell-off in the markets yesterday. A lot of that was based on the yield drop. So we've seen a very dramatic drop in the 10-year yield, and that's kind of putting investors on edge. Investors like consistency. They like slow moves. So just like we saw when yields were pushing north to 1.75 on the 10-year, that was freaking the markets out. Same thing when you've had such a dramatic drop to the downside. Now, the drop yesterday definitely was fueled by the Delta variant concerns. We're seeing a massive rise in cases here in the United States compared to just a few weeks ago. But it's unlikely, I would say, that we'll see another shutdown. And I don't think you're going to get that type of negative for the economy going forward.
I don't know what it is like in the US, but I've heard that before in Canada. We're likely to get a shutdown. And then over there in Montreal, where I was living, we got a second and third round of shutdowns. So don't take it personally when I say I don't believe you anymore, Gareth.
Yeah,
Anything could happen at this point.
I understand that too, right? I mean, it's definitely the question mark, and I think that's why the markets are concerned, right? I mean, that's why you saw the sell-off yesterday. I would just point out that at this point, at least in the U.S., there's enough vaccinations where everyone that has wanted to get one has gotten one. And if you don't want to get one, I think the outlook is like, okay, that's your choice, which is valid. But again, at this point, I doubt they'll shut down the economy on a political basis. That would be very, very kind of not good.
Well, I think some governments around the world have done maybe some math, and they realize that it's cheaper to bribe people with millions of dollars to take the vaccine than it is to risk a shutdown of the economy and lose millions more.
It is.
Yeah. So some governments, like I think in Canada, I think in Asia, they've taken that calculation. Now, turning back to the markets, Gareth, yesterday we had some fear around COVID, but it didn't really just start yesterday. If you take a look at the 10-year yield curve here, take a look at this chart. The yield curve seemed to have been sloping down for quite some time now. That usually is an indicator of declining confidence in the economy. What do you think is going on?
Yeah, so there's no doubt that there's declining confidence, right? So not only do you have the rise in the Delta variant, but you also have this fear that, and this is something I've talked about in the last interview I was on with you, David, is how you fear that after this huge reopening, there's some sort of air pocket that the economy is going to have to go through, right? So you have everyone saving a lot of money, right, during the COVID lockdowns. Now they're spending it on vacations and going out to dinner and going to parties and this and that. And the question is, well, what comes after? So you let's say you save $1,000 in that period and you spend it all on vacations or whatnot. The question is, what's the new reality after that? And I think that's part of it too, is people are starting to say, okay, well, you got the Delta variant, which is potentially hurting the economy. Then you have this air pocket as well. And that's creating this kind of yield curve slope down that could be an issue. The one thing I'd love to show you guys here is this chart on the 10-year yield. This is a level I'm looking at very, very closely. So right now, the 10-year yield's at 1.159. And just below right here, there's a 50% retrace from the high from this low. So again, I'm looking at that as a technical level where I do think yields will bounce. That level's right around 1.12, so we're very, very close to that. And I do think ultimately yields are going to head back up. I think this is kind of a combination of people were over leveraged on the long side of yield, so you had to see a flush out just like we've seen on Bitcoin. And then you also had the Delta variant pop up, which has made the yield here drop even more. But eventually, the printing of money is going to win out. In my opinion, there's no way around it. The printing of money will win out, and yields will start to trade higher again.
It's interesting. Usually, you have an inverse relationship between yields and stocks. I think that's what's been happening, right? The stock markets have been continuously being pushed up to new all-time highs. Yesterday, though, I think yields were dropping yesterday, were they not? Yet stocks had a huge sell-off. So anyway, let's talk about what happened yesterday and how you were positioned going into yesterday and then now going into today. Again, pre-market, what's on your radar right now? How do you think you're trading today's action, given that all the futures I'm looking at are in the green?
Yeah, so number one, it's important to kind of take note of where the futures are in the green. So the spiders right now are just up 0.3%. which to me is somewhat of a weak bounce considering the big drop yesterday. So again, you're always at these highs. You're going to have this kind of buy the dip mentality where you get a big drop and people say, oh, this is a drop and I haven't gotten all in, so I'm going to buy the dip. And that's the initial phase off of an all-time high. The one thing that concerns me here on the spiders, and you can see it here on the chart, is that we have broken again below this trend line that stretches all the way back to 2020 lows. And anytime you have a major pivot low like the 2020 COVID low, and it stretches and basically connects through all these lows, when you break it, you need to go on alert. One of the things that this recent bounce did, which occurred yesterday, is it confirmed this breakpoint. So you see, right, so over here we closed below, but you never had a secondary close below the trend line. You went right back up into the mix. 2 days ago, or on Friday, we closed below the line, and yesterday we actually closed below that low. To me, that's a term I coined called confirmation of a breakdown, and that's something that even with a small bounce today has me in a very negative bias on the S&P 500.
Couldn't that also mean that the action was just oversold and that you're due for a technical bounce up? Is that possible?
Yeah, absolutely, absolutely. But remember, technical bounces are basically situations where people are saying, okay, well, we've fallen X amount and then we're going to buy it in, or buy up to it. So I think that's exactly what you're seeing today. You're seeing this kind of technical retrace bounce. If you want to talk a little bit of technicals on this chart, you can see that there was this little pivot right here. We kind of came right into it. So you should get a little technical bounce. That's not unusual, especially near all-time highs. My question is, even if we bounce up, this line now becomes resistance on the market. And my analysis says that even if we do bounce for a few days, eventually we're going to roll down and start making lower lows.
Okay. And so today, would you be on the long side then on individual securities, or are you staying out today?
So as of now, this is how I've positioned myself. So going into the last week or so, I've continued to accumulate some shorts on the indexes, expecting a bigger multi-week, maybe multi-month correction in the markets. However, yesterday I did pick up some airline plays, and I was very close to picking up some cruise lines. Let me show you the Jets ETF here, which is the airlines. And again, this to me was something, and this is a pure technical play, right? Because the fear yesterday of the Delta variant, you think, oh my goodness, shutdown maybe. But if you look at the Jets ETF, which represents the airlines, it's been in a steep downtrend for the last month to 2 months. And look at this level that it got to yesterday. I mean, this is just a beautiful support area right here.